Hey, good morning, everybody, and welcome to another daily market report brought to you by Mike Bjork. Today is Monday, November 29th. Hope you all had a wonderful and fantastic Thanksgiving Day weekend here. Uh, I hope you enjoyed your time with your family and friends. So let's start off what we have here. We don't have any economic news releases for today, but it is a big news week, which I'll touch on here at the very end here. So we're relying on technicals. The stock market is currently down right now. We're probably having some corrections last week where a lot of the big hedge fund guys were usually on vacation on short weeks, take their vacation a little early. So we have the smaller guys that makes it a little bit more volatile for the week. So we'll probably have part of it will be correction, but also the biggest thing on their minds right now is the Europe Ireland bailout. There's it's not just Ireland being mentioned now, of course, as we mentioned earlier that Spain and Portugal will be brought in there, but Ireland also there's concern that maybe their parliament may not pass the acceptance of the bailout offer next week. They are underneath some election period, so a lot of them probably don't want to, so to speak, they're walking a fine line there where it's not very popular among the people there. It's all this bailout talk. Even with in our own country, we've had our issues as well. So it's been, you know, people wonder where's the free market there. So there, like any investments, there should be risk, and unfortunately, when you have government bailing them out, there's no risk involved. So, anyways, that's the soapbox there. Also on the news a little bit is the Black Friday, Cyber Monday. So looks like retailers were improving. We're showing some sales signs that were growth even from last year. People are buying. They're also looking to see if it extends today with the Cyber Monday with the sales going on today online. So we'll kind of see how that goes. But I think they seem to be kind of pleased from what the results were over the weekend. Big news week this week, as I mentioned. We have the Case-Shiller coming out. We have the Chicago PMI coming out this week. We also have consumer confidence as well as the Beige Book, which will kind of give you inside information in regards to how the Fed's last meeting went. ISM will be coming out, and then at the end of the week we'll have the employment numbers coming out. So those are all going to be big, influential when it comes to what drives the market. So the next one is so we have the bond market here. As we see, we've been going on a downward trend here. We have the 10-day moving average, and just as we saw a couple weeks ago, it just kind of dropped. So has the 10-day moving average. Wednesday was a huge day. It just dropped, as I mentioned. It was very volatile. Most lenders were closed on Friday, but the bond market was still open, so we actually were able to gain some of that back. We did open up with a gap opening, so we may see that close at some point. Usually they close. As you can see, it did touch off the 10-day moving average, and it has pulled back. So it's possible we could go negative, maybe come back positive. Without this big news this week, I wouldn't be surprised to see us come back to where we need to be at. We're probably going to be right in this range for correction period around the 99 mark for correction period. So we should see some improvements. And then from there, we'll see where the market goes. So as you can see, we're currently up 13 basis points. We're up even further as we saw. So anyways, as we mentioned, we gained a lot from what we had on Wednesday's numbers. So you guys have a great day, and anything else changes, I'll keep you updated.